As the U.S. market gets ready to open, we are looking at Recursion Pharmaceuticals, ticker RXRX. It is 8:11 a.m. Eastern Time on Tuesday, October 28, 2025, and the stock is currently trading in the pre-market at $6.24 per share. That's a pullback of about 1%, giving back a small fraction of the 4.3% rally it posted in yesterday's main session. Now, yesterday's jump is exactly what defines this stock, and it's the immediate insight most people miss. There was no major company-specific news yesterday. That move was likely driven by broad sector momentum and, more importantly, the extreme sensitivity this stock has to the general AI narrative. This isn't a normal biotech stock. It's an AI story stock, and it has become one of the most polarizing names in the entire market. We are witnessing a profound disconnect between the expectation of a technology-driven future for medicine and the harsh, cash-burning reality of being a clinical-stage drug developer. This tension is the only thing that matters for Recursion right now. Let's be clear about the common ground, the story that has attracted so many investors. The expectation is that Recursion is the future of drug discovery. The narrative you'll see pushed on investing sites and discussed heavily on platforms like Robinhood and SoFi Invest is that traditional pharma is broken. It takes a decade and billions of dollars to get one drug to market. Recursion, the story goes, is fixing this. They are a tech bio company, not a biotech. They have the Recursion OS, a massive closed-loop system that uses robotics to run millions of biological experiments every week, generating one of the world's largest proprietary biological data sets. We're talking petabytes of data. They then feed this data into sophisticated machine learning models, trained on their own supercomputer BioHive 2, which was built in partnership with Nvidia stock. The expectation is that this AI platform can find new drug targets, predict which compounds will work, and do it faster, cheaper, and with a higher success rate than human scientists. It's a compelling story, and it's why Nvidia stock itself made a direct investment in the company. But that powerful expectation is colliding head-on with a very brutal reality. The reality is that Recursion is, at its core, a pre-revenue, clinical-stage biotech company with all the risks that entails. Despite the fancy AI and the tech bio branding, they do not have a single product on the market. They are burning a staggering amount of cash. We are talking about an operating cash burn that in the first half of this year was running over $200 million. Their net loss for a single quarter can be over $170 million. While their Q2 revenue of $19.2 million looks like progress, it's almost entirely from collaborations, not product sales. This is a company that, as of its last report, had about $533 million in cash. While they project this runway lasts into late 2027, the math is simple. They are a bonfire of capital. The AI-driven platform has not yet proven it can get a drug across the finish line to FDA approval, which is the only milestone that ultimately matters. This isn't Apple stock, which prints cash. This is a speculative venture, and the high interest rate environment is absolutely punishing for companies that need to constantly raise and burn cash. Let's look at the recent stock movement, because it tells this story perfectly. This stock does not trade like a Fidelity blue-chip holding. It's wildly volatile. The 52-week range is a chasm stretching from $3.79 to $12.36. That tells you the market has no idea how to value this. The stock spikes violently on any AI-related news. When Nvidia stock has a good earnings report or announces a new AI chip, RXRX often catches a bid, as investors look for picks and shovels plays in the AI healthcare space. It also moves on news from its big-name pharma partners like Roche and Bayer. A $7 million milestone payment from Sanofi, as reported in Q2, is treated as major validation. But the stock also collapses on risk-off days in the market, or when the broader biotech index, XBI, falls. This is a high beta story stock, and many investors using the Robinhood app for self-investing are in it for that volatility, not for a stable long-term investment. The institutional ownership is a who's who of this exact tension. On one side, you have massive institutional holders like Vanguard and BlackRock, primarily because RXRX is in a ton of tech and biotech ETFs. But then you have the true believers, the high-growth funds like ARK Investment Management. Their ARK-G and ARK-K funds are major shareholders, betting fully on the expectation of an AI-driven breakthrough. On the other side, the short interest is sky-high, recently clocked at over 28% of the float. That is an enormous bet from sophisticated funds that the reality of the cash burn and clinical risk will win out, and the stock price will fall. These are traders using the advanced tools on the Interactive Brokers platform to actively bet against the AI hype. So, what does Recursion actually do? Their business model is twofold. First, they are developing their own internal pipeline of drugs. These are in areas like rare diseases and cancer. They have several programs in Phase 1 and Phase 2 trials, like REC-617 for solid tumors. This is their direct bet on their own platform. This is the part of the business that is most like a traditional biotech. Second, they have their partnership model, which is where the tech bio story really shines. They essentially license out their AI platform to big pharma companies like Roche, Bayer, and Sanofi. These companies pay Recursion upfront fees and potential milestone payments totaling billions in biobucks if everything works out, to use Recursion's AI to find new drug targets for their pipelines. This is a brilliant model because it generates near-term cash and provides massive validation from the very industry they are trying to disrupt. The Nvidia stock partnership is a technology one, providing the computing hardware and AI expertise to build and scale their models. This sets up a very clear future outlook. The bull case, the expectation, is that one of their clinical trials hits its endpoint. Imagine they announce positive Phase 2 data for one of their cancer drugs. That would be the first concrete proof that the Recursion OS can find a winning drug. The stock would re-rate overnight. Or, alternatively, Roche or Bayer announces they are taking a Recursion-discovered target into a major late-stage trial, triggering a 9-figure milestone payment. This would validate the platform and shore up the balance sheet. In this world, the online investing narrative that AI can solve biology comes true, and the short sellers are forced to cover, creating a massive squeeze. This is the future that a SoFi active investor user is dreaming of. The bear case, the reality check, is just as stark. The biggest risk is simple: clinical failure. If their Phase 2 trials fail, it's a devastating blow. It would suggest that for all the petabytes of data and AI modeling, their platform is no better at picking winners than the old-school methods. The second biggest risk is the cash burn. Even with a runway into 2027, that date is not guaranteed. If they accelerate spending or their collaboration revenue slows, they will have to raise more capital. In a high-rate environment, that means selling new shares at these low prices, heavily diluting the Robinhood investments of every existing shareholder. This is the scenario that keeps Fidelity Wealth Management advisors from putting their clients into this name, instead opting for the stability of a diversified Schwab Intelligent Portfolios account. It's just too speculative. This isn't Tesla stock, which is now a profitable auto giant. This is a pre-profit science experiment. This is a true investment dilemma. Are you betting on the technology or the balance sheet? Are you investing in a platform that could change medicine, or are you holding a cash-burning biotech that is years away from a product? The analyst community is split right down the middle, with a mix of buy and hold ratings and price targets ranging from $3 to over $10. This signals a complete lack of consensus. This is a stock where you have to pick a side. It is not an intelligent portfolio set-it-and-forget-it holding. It's an active, high-risk bet. So, I want to hear from you. Comment below with which program in their pipeline you are watching most closely. Are you focused on the internal oncology trials or the big pharma partnerships? To summarize, Recursion Pharmaceuticals is the